Mastering the business cycle for financial success. The global economy moves in cycles, similar to the changing seasons. Understanding the business cycle is crucial for making informed investment decisions. Today, we'll delve into how economic ups and downs influence investment decisions and performance. John, a 40-year-old engineer, appears frustrated as he checks his phone. He recently sold his investments, only to see them rise significantly afterward. This experience has left him frustrated and eager to learn how to avoid similar mistakes. Seeking guidance, John reaches out to his old university friend Mary, an experienced AIA financial services consultant. "I know the feeling, John. Market fluctuations can be unpredictable, but the key is understanding the bigger picture, the business cycle. Once you grasp how the economy moves through different phases, you'll be able to make more informed investment decisions. Let's explore this together." The global economy follows a cyclical pattern with 4 distinct phases. Let's break it down. The expansion phase is characterized by economic growth. During this time, businesses invest more, jobs opportunities plentiful, and consumer confidence is high. The stock market typically performs well, and investments in growth-oriented assets can be rewarding. Next, we reach the peak. This is when economic activity reaches its highest point and is expected to slow down. During this phase, growth begins to slow, inflation may rise, and assets can become overpriced. Investors often start moving towards safer investments in anticipation of an impending market contraction. Then we enter the contraction phase, which often leads to recessions. Businesses cut back, unemployment rises, and stock markets decline. Interest rates typically fall, which provides support for investment-grade and government bonds. This can be a challenging time, but for investors with a long-term horizon, it also presents opportunities. Value investors might find high-quality stocks at discounted prices. Finally, we reach the trough, the lowest point before the next expansion begins. During this phase, central banks lower interest rates, and governments implement supportive policies to stimulate economic recovery. Investors who are forward-thinking will start to invest in the markets, anticipating the upcoming upswing. Thanks, Mary. I've heard about business cycles, but how do they impact my investments, and how long do they last? Each expansion and contraction varies in duration and intensity, typically lasting between 2 to 10 years. Here are some insights. Expansion phase. Equities and growth assets tend to perform well due to increased business activity and low interest rates. Sectors like consumer discretionary, industrials, information technology, and financials typically outperform. Historically, US expansions have lasted longer than contractions, averaging 65 months versus 11 months. Peak phase. Investors often shift away from economically sensitive assets. Diversifying into bonds or defensive stocks can help mitigate risk. Contraction phase. Focus on maintaining cash reserves or investing in dividend-paying stocks for stability. Defensive sectors like utilities, healthcare, and consumer staples are favored. Trough phase. Long-term investors start seeking undervalued assets in preparation for the next upswing. That makes a lot of sense. Understanding the business cycle helps me make better investment choices, rather than reacting emotionally to market changes and noise. Exactly. Smart investing is about patience, diversification, and staying invested over multiple business cycles, not about panicking and reacting to short-term volatility and noises. AIA Stewardship is designed to help you focus on the long term via a diversified portfolio, reducing the impact of market fluctuations. Predicting the phases of business cycles can be tricky. With AIA Investments and our partners' professional oversight, We continuously monitor and make sense of economic data and business cycle, offering customers long-term investment opportunities. Remember, while the business cycle has its ups and downs, the market generally trends upward in the long term. With AIA Stewardship, you can approach market complexities with more confidence, as our experts strive to help you turn economic fluctuations into potential growth opportunities. Discover the power of AIA Stewardship and take control of your financial future today.